Okay guys, welcome. I'm going to do a subscriber pick video where I'm going to go through the comments and look through some stocks that some of the subscribers and commenters have wanted me to look at. So that's what this video is going to be about. But real quick, I'll do a quick overview of the general markets. I'm not going to cover any of the stocks I've been looking at recently. We'll just do the general markets and then get into these subscriber picks. All right, NASDAQ futures. Let's go to the hourly here. Yeah, just chopping around. I suspect they're going to close it. We close in 30 minutes. I suspect it closes down here at this trend line. This doesn't look like an impulsive breakout. So we were recently trading under this as resistance right here. This 12,943.50 and broke above a little bit today, but it's just kind of drifting. Nothing impulsive. So we'll see how the day closes, but all in all, not a big change from yesterday on the NASDAQ futures. Here's the SPY futures, same deal. You can see here that we have this bearish rising wedge right here on the hourly chart. That's kind of the big pattern. It's been in this since November. False breakdown during the holiday weeks. Another false breakdown shortly after. This took place, this is the beginning, January 4th, start of the new year. Recovery, and then it's just been kind of chopping around up here. It's undecided. It's undecided on where it wants to go. So again, we don't know. Here's the small cap futures RTY. So this one, bearish rising wedge right here, just a really tight wedge, and again, false breakdown during the holiday. Another breakdown. This is consistent with what we just looked at on the SPY. Been chopping around. We're starting to roll over. We had two tests above this, once there and once there. We're starting to roll over, but again, we've been in this area before, so we can't say that this is a breakdown yet. It's just not decided on this RTY small cap futures. Let's look at the tech sector triple Qs ETF. Again, this is the one to watch, I believe, because this has the FANG names, and the FANG names are the market leaders. Essentially, they've been the leaders for the entire bull market. They're not leading as much anymore, and that is, that's potentially signaling a top. When you're leaders, yeah, there's always rotation, but the thing is, and that's what that's what they're trying to tell everybody right now, is there's a rotation into value, there's a reflation trade going on, and the market's all going to go, the economy is going to come back and everything's going to come back to normal. That might be, but, if the economy does come back, we're coming back with likely less stimulus, and this market has been trading on stimulus, so that is basically what we have to watch. Here's triple Qs. We're kind of above this resistance line right here, 315.15. We'll see where it closes. 30 minutes left in the trading day. Again, here's the pattern, bearish rising wedge right here. See the wedge? We've been wedging up. We broke once, so that's a sell signal. We did a back test, started to break down, kind of chopping. But you can, if we roll over here, this will have been a lower high. So this was your back test here, sell off, try to make another run at it. And if you sell off right here, you made a lower high. So look for that to play out, and then look for an undercut of the lows right here at 311. And then ultimately, I think if we give this up around 307, the lows that we saw when we got that sell signal in the tech sector, then I think 298's in the cards. So I'm looking for that. Again, we need to see some sort of impulsive breakdown. We just haven't seen that yet. And again, I think it's likely to come in a form of a gap down. We haven't seen, there's been no bull traps yet. All the sell-offs have taken place during market hours. Usually when you're going to get that definitive break, you're going to see a bull trap. So look for the gap down to show up. SPY here. SPY, same thing. Upward price channel right here on the hourly chart. And we're just still within that price channel right here. So no change on SPY. Small caps here, kind of starting to break down. We'll see how this plays out. It's been it's been real whippy right in here, where we can't quite decide which way it wants to go. So I think it's going to break down. There's negative divergences across multiple time frames on all the indices. So I think that that's signaling a break. But again, if you burn through those divergences, it could set up for a pretty substantial rip higher if we get it. So as of right now, the momentum is telling me we're going lower, but price is not yet. So we need to see the price start to confirm that. TLT, long-term treasury bonds, catching a bid today. So again, here's kind of this falling pattern we had. We had a break to the upside. I think the first level, we have is, we do have some gaps right here. So I think, we could fill these gaps right there. That might be the first level of resistance. And then obviously all the way up here around 156. And so the first gap is 153.84. We'll watch that. On the hourly, we did have bullish divergence, signaling that bonds were going to go higher in the short term. If you look at the daily, though, we don't have any bullish divergence here on the daily. It's just bearish momentum. So I think TLT, this is kind of the first bounce, but it's likely that TLT does another move to the downside. And the thing is I think it's possible we get a kind of a good impulsive sell-off, a little bit more in TLT, putting pressure on the market, and then the market's going to start to sell off, and then you'll see that flight to safety in long-term treasury bonds. But as of right now, this is we're bouncing higher. We just don't have the bullish divergence on the daily, so I'm not so sure. I think it's possible we can go a little lower in TLT. And this is really the one to watch. I've got the futures up as well, the dollar futures. Here's the dollar futures. Breaking higher. Nothing impulsive yet, but as you can see, this is your downward pattern. So the dollar's been selling off. If I roll out, let me look here. Really since, you got to go to the daily here. Here's where the dollar's been selling off since the Fed stepped in with their COVID relief. And the dollar's been selling off and the markets have been rallying. So the market rally, for the most part, I believe, is just due to the dollar weakness. If we start to see the dollar strength, then the markets will likely sell off. So that's what we're looking for. So now going back to the hourly, we have this downward trend line right here, a downward pattern. We got the break. We had bullish divergence across the board on the dollar. We got the break and ran up to what looks like first resistance around 90.60. Came down, hit the first support around 89.93, and we're bouncing off support, moving higher. So look for a break of this resistance to signal that the dollar is going higher. The market will start to get spooked most likely if the dollar continues to move higher. And the DXY is, you can see that we're we bounced off support, which is right about $90. And we're moving higher. So we got the initial bounce off support. Now, do we have enough, for the dollar to continue higher? That's what I'm looking for. And wrapping it up on these market reviews, we've got gold just kind of hanging out around support. So gold here on the daily. So, we've got major support around 1790. So that is major support. And so, if we continue to just kind of hang out around where we're at, maybe we drift lower and hit that 1790 over some time. To see what that looks like, let me mark that out, extend this out just a little bit. So maybe we just bounce around here for a little while and then sell off, hit 1790 again. That's major support. However, if you look at the daily, if you look at what we got going on right here, we've broken out above this downtrend line. We broke out here, false breakout, was a bull trap, sold off right down to major support, 1790. I had been calling for that the entire time. When we were in this downward pattern here, I kept telling everyone I think we're going down to the 1790 area. That worked out. That played out. That turned out to be accurate. Now we broke out again and coming back in for a back test. So to me, this is an objective area to go long on gold. But again, if the dollar is going to move higher, usually that's negative for gold. It doesn't have to be. We might see a rush to safety across the board for all safe haven assets if there is a sell-off. And the dollar and gold might go up together. That's always possible. I've seen that take play. So that's the thing. We're watching gold at support right now. If we, down here, if we can get down to the 1750, 1700, depending on when we get there, maybe it'll be 1800 by the time we get there. But down there looks like major support for gold. So what is possible is one more little dip down, coming down into this like 1750 area on gold, a breakdown in gold. And if we do that, it'll put in bullish divergence. It'll look maybe something like that. So I could see us bouncing from here a little bit and then coming down, undercutting that down to 1760 area, getting a little bit lower, kind of marginally lower. And there should be some major buying support in that area around 1750 or so, depending on when we get there. So I'll keep an eye on that, and I'll point it out if I see it. Okay, we'll start out with VALE here, iron ore miner. So I think it's Australian. I don't quite remember, but basically you've got negative divergence here on the daily. That is confirmed. You can see that we started to turn down. So this price action right up here is a divergent high. Divergences aren't a sell signal. It's not saying, okay, time to just exit this thing, but it is telling you that a trend reversal has a higher probability. Looking at the PPO here, you can see we had a bearish crossover, came down. It looks like they wanted to break it higher, but it was, to me, it looks like a fake out and it's going lower. So bearish PPO pointed down. You also have negative divergence on the daily on the PPO right there. So what does that mean? Well, I narrow it down to the hourly here. Try to find a trend line to trade off of. As of right now, yeah, you don't really have a clean uptrend line. You could possibly, maybe make something like that. From my perspective, I can just see this horizontal support line right in here. It's right about there. And we've kind of had liftoff from that a little bit, but I would watch for that to hold. I think it's likely we come down and tag it down around 1663 and see if that holds. That's a drop of about 8.5%, or could just continue higher. I don't have the cleanest trend lines on it, but we have negative divergence, so we'll just see what this wants to do. We also have, here's your March lows right here. So if we break this horizontal shelf, then I think it's very likely that we're coming down to retest the kind of the more major trend line that's been in place since the March 2020 lows. And that's sitting down here around $13, depending on when we get there. Someone asked me to cover Carvana again. All right, Carvana is, it's a momentum name. So you're going to overshoot levels because there's a lot of people in these names that aren't tracking trend lines. They're just buying regardless of anything. If there's positive momentum, they're buying. And they'll be selling when there's negative momentum. And in this one, we've got this bearish rising wedge right here. My trend lines are moving around. Bearish rising wedge. And we are just currently kind of on the outside of that wedge once again. So we've been outside of it once before. We're outside of it again. I still think it's likely that the market sells off. If the dollar starts climbing, this is going to sell off with the market. And I think we'll head down to the bottom end of this bearish rising wedge. And then you look for the break. If it doesn't break and it holds, you can continue to move higher within this wedge. If it breaks, we're going to look for, quite a lot of downside. Also on the daily here, negative divergence is still intact. There it is. Big negative divergence just continues to extend. So nothing's changed on the momentum indicators. There's still negative divergence on the PPO and the RSI on the daily chart, signaling that we're in for a more major downward trend. Doesn't have to be a bear market or an absolute crash, but it is signaling that we're going to have some sort of trend to the downside. So I think it's very likely we at least fill this gap at 174.38 and possibly come down to this 126 area. Someone asked me to cover SPCE space, and the first thing I can see on this daily chart is this big symmetrical triangle. These can break either way. There's no probability around which way they're going to break. And it looks like it broke to the upside. Here's your breakout and what looks like a back test, although they stepped in early, not a full back test. So I could see us putting in a full back test. That's what I see on this one. However, this will likely trade with the market. So keep in mind, if there's a big sell-off in the growth stocks or the dollar starts rising, this thing will likely get wrecked with the rest of the market. I don't see on the daily, I don't see any, I don't see negative divergence. You can see obviously you're making lower momentum, but price also made a lower low right here. So it's not a divergent high price. So yeah, could go higher on this one. I don't know. All right, shop here. I've looked at this one in the past. All right, here's your March, or actually this is February 2016 lows. So here's kind of your longer term bull market. This thing hasn't traded, it only started trading back in 2015. So here's your bull market in this stock right there. And basically we're pretty far above that trend line. We've got the 200-day sitting down here at about 919. And we do have negative divergence. It is intact. There it is on the RSI, and there it is on the PPO. So negative divergence. And we have, to me, what looks like this, this was a trading zone right through here. We did, this was going back several months of trading. I would look for a break below this, which will likely break the 200-day at the same time. Below this, and then from there this thing's set up to come back to the bull market trend line. Does it break the bull market trend line? Well, who knows, but a retest back down to the trend line I think is likely if you break below this 886.75 area, and from there that would be a move of about 30-40%. So yeah, that's what I see in this one. Until you get that breakdown, I think it's obviously this can just continue to extend this divergence and go higher. But it is, with this negative divergence, a pretty good size one as well. I think it's likely we come back down and retest this. And that is, from where we're at right now, if it was to drop down to the trend line, that's a move of about 50%. So that's we'll cut the stock price in half down to about 600. So I think that's possible. The divergence is just telling me that that's possible. We don't see the price action to confirm that yet. The trade desk. Okay, this one looks like it's gonna break down, and it looks like it's imminent. Actually, it looks like it's already started to break down. So we'll have to watch this. This one's pretty good looking. I might actually take a short on this one. Here's what I like about it. Bearish rising wedge right here. So here's your March lows on the daily chart. Bearish rising wedge. We've just been walking up that the entire time. Broke to the upside, nice impulsive gap up, and continued to move higher. However, what I say often is when you're on the upper end of a bearish rising wedge, it's a low probability area. You're oftentimes going to fail, and it looks like that's what's happened. So impulsive breakdown back within the wedge, and it's just sold off, breaking the bottom end support. So here's your trend line support that's now been broken. And it looks like it's doing a back test. Back tested for several days, starting to reject today and sell off. So I think there's some continued downside in this thing. We've also got a gap right down here. So there's kind of the nearest target that's sitting right around 665.83. And that, from where we're at, that is a move of about 15%. So likely to get a reaction or a bounce there. That would be my first profit target. Okay, so plug power, obviously a bubble name, and I know that because I hear about it a lot from retail traders. So here's the uptrend line in plug. Bubble names can continue to extend. There's nothing that says they can't. Looking at this trend line, this is when plug really started to take off. This goes back to 2013 here. But here's kind of the lift off back in June of 2020. And there's your trend line. Really starting to lift off and go parabolic at this moment on pretty, it's gapping higher. It's just creating these big gaps higher. Not price action that you want to see for sustained strength, but there could be, more upside, obviously. Looking at the daily, no negative divergence. The momentum right here just burned through the negative divergence that was in play. So we'll get rid of that. So again, obviously we could come down, and hit this trend line, but there's no technical breaks or damage or no technical indicators telling me that we're going lower. for a swing trade at least. So what I would, at this moment, what I would look for on the hourly is probably this trend line. Look for this to break. And if until it breaks, obviously this can go higher. And if it does break, then I think it's likely we come all the way down to this $30 range, or depending on when we actually get there. That's a good size drop. But this thing's been on fire for all of 2020. So if it breaks that, then maybe we come down to this trend line, and then we'll see what things are doing. Until it breaks that, though, it's still up and bullish. Here's Jazz Pharmaceuticals. I've been looking at this one for a second, trying to figure out what's going on with it. On the short term, here's your March lows right there of 2020. So we have this uptrend line right there. We're well above that trend line. Starting to put in some negative divergence right there. It's showing up. Usually, it doesn't show up for too long, but there it is. This is all this is some divergent high price action, right? You can see right there this day that was a divergent high. It was trading way up here, and they sold into it. This one was kind of a divergent high. So these divergent highs are getting sold into. That's what that's showing, and above the trend line. So I think it's likely we come down to retest this trend line down around 141 or so. A break from there, if we break that, I think it's likely we head down to about this 95.56. Looking back on this thing, I see this big sideways range. This thing really has topped out back in 2015, and it's just been going sideways ever since. So about 5 years of sideways action. Could be consolidating and building energy for the next big break to the upside. But until that happens, until you see that definitive breakout, it's in the sideways range. We're nearing the top of the range, which to me, I think is about the all-time highs, which looks like it's sitting up around 192 or so. So again, obviously we can run up and tag that and then reject. That's kind of what I got on that. Here's one, Smith & Wesson, SWBI. What I see on this one is this is going back to 2016. So Smith & Wesson was in a bear market really since 2016, and you had this downward price channel. Here's your breakout right here in May of 2020. Yeah, it actually broke out of its bear market and has since put in a new all-time high, basically. So when I look at this, I don't, yes, there is a little bit of negative divergence right there starting to show up. So this was a divergent high right here. When we put in that all-time new high, we'll see what plays out. On this one, looks like we have a little bit of support, right? We've got some support kind of right in here, which is sitting right about, could be a little bit higher, right about there, which is about 15.11. Call it $15. So it closed below $15 on the daily, and I think it's likely we come in for a back test on this breakout. Usually when you do big breakouts like that, you're going to at least do one back test. And so a back test of that puts this thing back down around $6. That's a good size drop on this one, about 70%. I'd be looking to be a buyer, a longer term buyer of that, down around that $6. If you get it, otherwise this was a breakout, and it could obviously continue higher, and have started potentially a new bull market. I don't see anything else that stands out to me, really besides that. Someone asked me to look at Redfin and whether I thought it was a good short, and yeah, I do think it's a good short. Here's what I got on it. You've got, let's see, daily chart. False breakdown right here, and we're ramping higher. Ultimately, though, you can see this ramp that we did right there on the daily. We started to lift off, we broke, and there's your back test. Full back test right there. I'm trying to see if we have negative divergence. It is negative divergence because it made an equal high. This was an equal high. It actually looks like it made it today. And it made it on much less momentum. So there's your negative. Well, I can't say that it actually made the high yet. let me look at the hourly here, see what we got. This is kind of your high area right there. No, we haven't quite gotten there yet. So I don't know. I'd probably like to see a little pop, one final kind of pop or some sort of impulsive move higher to put in that negative divergence before taking a short. But you can see the hourly, this trend line right here is pretty clean. You know, we broke down, there's backtest 1, hasn't backtested again. So maybe we do one final rip higher up to about 85, 84.50. Put in that new high, setting in that negative divergence, and then you break down. But you got to wait for it. I don't know. I'm a little undecided on this one. And then also someone pointed out Sunrun or Run is the stock. Let's see if I can find that one. This one, same deal. Looks very similar to that last one. Here's your March lows of 2020. Just this huge ramp up, a lot of enthusiasm and momentum in these EV stocks, and this is a EV stock. It's a solar stock, or I don't know what they do, but it's Sunrun. It's all, they're all wrapped into the EV play that really got kicked off with Tesla, and we have negative divergence right there. You can see, and it's also on the PPO. It just extended out, but there's your negative divergence on the PPO and the RSI on the daily chart. So this price action here is divergent high price action near resistance. Not quite there yet. Resistance is about 106.50 right now. 107 we'll call it. That is the most objective area to establish a short position. If you can get it. Sometimes you don't get it. Sometimes they don't give it to you right at that objective area. So if we start to reject here, then maybe that's all she wrote, and we start to break down. This one's got a lot of steam. I think all said and done, when it's all said and done, this one's back down around 23.40. So I'd be watching for that. But again, there's no real sell signal yet because it's not. We don't have an impulsive breakdown. I'd like to see some sort of impulsive breakdown. Otherwise, I'd be looking to maybe establish a short up here at resistance on a back test. Snap, I don't see anything in this one, but there is this huge gap right here on Snap. So I think it's very likely that gap gets filled. What I'd wait for on this one is probably wait to see if the markets break down. Like if Q starts breaking down and the tech stocks and really the momentum stocks start to break down, this thing's likely going to come down and fill this gap around $29. For that would be my target. There's also another gap actually way down here at about $14. That's possible. It's a ways down. You'd have to have a pretty big bear market, and that's obviously possible. But more obvious, kind of easier target, just to bat a single basically, is about this 29. It's about $30. We have this bearish rising wedge. We've been trading above it though, and it's really starting to chop through it so much that it's starting to invalidate this trend line a little bit. You could probably extend it out like that. I mean, it's getting to the point where it's just getting kind of sloppy. So I'd look for this bottom trend line, a breakdown of this bottom trend line down here, some sort of a definitive break and close below. And the more it's down, the better when you break. You want to see that impulsive selling come in. Then that sets us in motion to fill this gap. Big negative divergence continues to extend. There it is on the RSI daily, and there it is on the PPO daily. So negative divergence. Yeah, it looks like a good short if or when you get that sell signal, that big impulsive break, I think, of this trend line right here. Until then, I'd let this thing just kind of do its thing. Okay, a couple more, and then I'm going to wrap up, try to keep it relatively short. All right, ex-US Steel. So this one's been in a bear market for a very long time. This one actually never recovered from the Great Recession. Let me see here. Yep, that looks like the peak. So this is 2008, and this one's really gone in the opposite direction of the growth in tech stocks, basically. It's been in a bear market since 2008. So your bear market is, we got a couple trend lines right there. This isn't a valid trend line because I only have 2 data points. I need a third to validate this. Looks like this steel is running up to hit that trend line around $31. Likely to get a reaction there. So what I would look for on this, if this is going to break, because this is kind of part of that inflation trade that's going on right now in the markets, where everybody's thinking there's inflation coming, so they're all buying inflation hedges, which is potentially an opportunity for gold and gold miners, because they haven't really had that performance lately. So anyways, just kind of rambling on. X looks like it's ramping up to hit this. I don't see negative, well, this is the weekly here. Let's go to the daily. Yeah, negative divergence there on the daily. Right there. And also on the PPO on the daily. So what I think plays out on this one is maybe we get a pullback here a little bit, and then we do one final ramp up and hit this 31. And then that is your bear market trend line. So this could obviously continue in a bear market, and I think you're likely to get a rejection or reaction there. And what I would look for look for the breakout. If it's going to break out above this, look for an impulsive breakout. The more green, the better. Look for volume to help confirm that, and that might set this up for, starting a new bull market. But in general, it's still in a bear market. This looks like a bear market rally to me. Bear market rallies oftentimes are really impulsive. And as you can see, coming off the March lows, really in just a short period of time, it's up 400% in about 5-6 months. That looks like a bear market rally to me. So only time will tell, and you'd want to see a definitive breakout above this downtrend right here. If we run up and hit it and get a reaction, that's going to confirm that we're still in a bear market until we get that breakout. Okay, airline stocks. Here's ALK, Alaska Air. I just don't see it on the long side in these things. I looked at these probably about a month ago, and obviously they've continued higher, but there's been negative divergence really since this June peak right here, and that's what I saw in the past. So there's your negative divergence. Again, negative divergence doesn't mean something's going to just sell off right then and there. It can continue higher, but it tells you that you're likely to see a trend reversal. So this is an uptrend here. You get the trend reversal. You do the downtrend to the downside. On this, looks like we've got, there's your March lows. There's your trend line right there. And what kind of making a bearish rising wedge, maybe something like that. Bearish rising wedge in this thing, big negative divergence. So again, you need to see a breakdown or a sell signal, which for me would be a break of about this 43 area, this lower trend line, depending on when we get there. And when you see it, that would be the sell signal that's saying that we're likely starting the next downtrend. So I'm gonna continue to look for that, but that's really all I see on this one. Okay, guys, that's all I got. I went through all the comments, found the ones that kind of looked interesting. I didn't cover them all, so if I didn't get to yours, I will really try to get to it next time. And I do appreciate it, so leave me a thumbs up if you guys find value in the content. And obviously, everything in this video is just my opinion. This is not trading advice, and it's not investing suggestions or anything like that. So thank you. Catch you guys on the next one. Bye.